swimming.
Hi, Tyler. Okay, live. Oh, geez. Hi, this is Hyperwave. That seems to be happening each time, and there's reverb there. Okay. Good morning. This is going to be a fun one, and yeah, there's some crazy price action that just happened. So if you missed it, then obviously we're going to be talking about it. So it's going to be a lot of fun. I also just wanted to say, yes, good morning, everybody. That very kindly Tone, big shout out to Tone and Geppetto, that they're actually converting all of these shows now into Tone's audio podcast. So you can actually catch these on the podcast version if you can, stream from YouTube or anything. So it's very, very kind of them, but you can find it anytime then. So with that said, again, thank you, Geppetto, and to Tone, and I will turn it to Ty.
Great. Thank you very much, Leah. Good morning. Good morning, everyone on the East Coast and whatever it is all around the world. What Leah just said is important because I'm going to start thinking a little bit more carefully about the words that I choose when I'm looking at a chart, knowing that more and more people are not going to be looking at the charts. So the reason we're doing this one this morning, other than the fact we're going to try to do these every single day, is a couple of important things started happening about 2 hours ago in my mind. And I don't yet have any conclusions what they mean, but I wanted to explore them with you online, once again, to sort of show you how various techniques can be used with various technical tools. I listened to Tone this morning at about 4 o'clock in the morning Eastern time in Europe. He did an excellent show where he went to a lot of details, answering a lot of questions. So, we can go for months and months and months and months without anything really very interesting happening. That's true in all markets. It's less true in Bitcoin and cryptos because of the speed with which things move and the illiquidity with the markets. But at certain times, very critical things happen. And at certain levels, certain very critical things happen. We are at such a level right now. We have been, as we bounced along between 7,000 and 7,700 on Bitcoin, trying to figure out, were we going to go up to 8,000? Were we going to drop back? And then when we broke down through the 7,000 level, that became very, very important. And it turned a lot of other analysts around 180 degrees because they had not expected that. And as you know, we have been expecting it using other tools that most other analysts don't have. Hi, Thor. Most other analysts don't have, or other analysts that do have, like the sequential or the TD, haven't perfected it the way Tone has. Therefore, what happens when you apply new tools to what everybody else is looking at using old tools or other ways of looking at things is you get a different conclusion, which most of the time will be very similar to everyone else, but at key points, it will not be similar. It will be 180 degrees different. And that's why it's so important for everyone listening to make up their own minds by going into detail about listening to what is being said by various practitioners and then holding them and their systems accountable for the conclusions they are drawing. You don't have to say nasty things when they go wrong. You don't have to sing the praises when they go right. My point is, you intellectually need to sort through that to understand where you want to go to influence your own decisions. Okay, with that opening, I'm going to go right to screen share. I mentioned in a couple of tweets as the drop was happening this morning that that I thought this was interesting because I had not expected it. And I will just review my thinking as the market was dropping, as well as where I said that I believed we could bounce up to as high as 7,000. So to do that, I'm going to go to a daily chart. And no, I'm going to go to an hourly chart. Now, this is the 7,200 level. I am looking at a chart that only shows the drop from 7,600 back on the 9th of June. It dropped from 7,600 down to 7,200, then went sideways for a day and a half before the big tumble that occurred just a day and a half ago. And ever since then, we've been going sideways. We got as low as 66.27. And now we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 20, 30, a day and a half worth of sideways action, where the high got up to 68.35. And I am looking at Bitstamp right now. I actually saw a high a little bit higher than that at one point. Let's see if I can find it. There's a 68.26, 68.35. No, maybe not. Okay, we'll call it, it got over 68. So small range, 66.27 on the low, 68 something on the high. When I drop down to a shorter time frame, I'm sure I can find a little higher level. I don't see that either. Okay, so basically what you're looking at then is a very short-term chart, which included one of the more important drops since the top at 19,000. Well, how can I say that? Because it only lasted for an hour and it took us from 7,200 down to 6,600. Yeah, that was fairly impressive. So let's go back to a bigger chart. I'm now going back to the weekly that shows the whole thing. And you'll notice that on the weekly chart, we've got a couple of very important points. I'm drawing a line now that is coming in at approximately 11,700. When we broke down through that initially, which came just the second week off of the top, we bounced very strongly, and then we spent 5 weeks above that line. But look how important that line was from this point. And I am pointing to the week of, I'm pointing to the week of January the 14th. We closed right on that line, but we had dropped all the way down to 92.22 on the low on that week. And the high was almost 14,400. We closed right on this line that comes in somewhere around 11,700. The next week, we again closed on it, but it was a small doji. It wasn't really small for the week, but compared to the week before it and after it, and it was positive, just barely, but we closed the same place that we were sitting the week before at around 11,700. The next week, the high was that same line, 11,700, but we dropped all the way down to 7,600. And then we established the low at 59.20 in the following week with a reversal candle. And guess where we went to during the next 4 weeks? Right back up to the 11,700 level. So that line became essential to understanding the movement of Bitcoin. And maybe will play a role in the future. I believe it will. But what I just said was, I think we are at a point now where a similar existential line has been drawn. And I just popped it in. And now I'm twirling it around like a baton. Oh, there we go. Okay. This line, which comes in at around the lows of this current action, 6,700 approximately, I think is also an essential line. And you can see why by going back in history through the May and March 25th, April 1st, April 8th bottoms, where we had 3 weeks in a row that bounced off of this line. We also had this reversal, the ultimate reversal from 5,900 that got below the line and closed above it. And even going up all the way back in October, we had 3 weeks in a row where this line was the center point of 3 different weeks, 2 of them positive and 1 negative. Okay. Sorry for those that are just listening, unless you can pull up a chart and follow along with us, because this is getting way down into the weeds, but I believe it's very important. We're trying to answer the question, is the market now bouncing? And if so, how high can it go? And I posed the question on Twitter, is the bounce over? So we're talking about some fairly significant things here. And to look at it more closely, we're going back to the 1 hour. When we broke that line, again, the one that came in somewhere around the 6,800 level, first of all, I said before that drop occurred that I would go from neutral to negative on a short term if we drop below 7,026. And certainly the big candle went right through that and kept on going. And then it went below this line that we're talking about now and has been below that line ever since. Ever since. Even though we've got 24 hours, more than 24 hours of activity at the 1 hour level, none of them have crossed back above that line. So that is massive overhead resistance. I originally said I thought it could bounce back as high as 7,000. I'm beginning to doubt that because of the recent action. So now I'm going to go down even a little bit lower to the 30-minute to show this candle, which occurred an hour and a half ago, where I sent the tweet out, because we were attempting to move up over the previous 6 hours. And we'll see that when I take a look at some of the momentum indicators. And then very quickly, we got slapped in the face with this candle at 9:30 this morning, in which we reversed. Tone did not have the luxury of seeing that candle because he was posting at 4 o'clock in the morning. And then we had that candle. Since then, we've had a couple of attempts in the last 30 minutes and 60 minutes to regain the upward momentum. So I have not concluded if we have finished the bounce from the 66.27 bottom without hitting 7,000, but I'm now beginning to think it might be very difficult for us to get above 6,850, and it is possible that we've already seen the end of the bounce. Okay, how can I draw all those conclusions? Well, we need to look at the technicals. So the first thing I'm going to do is I'm going back to the weekly chart. I'm going to put on the SARs just very briefly, and you can see the weekly is very negative in terms of the stop and reverse points. We've got to go way, way higher in order to reverse that. I also said that all time frames were in the same position. There's the 3-day, the 1-day. The 1-day now has 3 negative stop and reverse circles above the price action. And that price action currently, as of this 24-hour period, is 77.10. We would have to get up to 77.10 to reverse the stop and reverse action, and we're not going to do that, in my opinion, or come anywhere close to it. The 12-hour, we have 5 postings, and remember, we're still below that line at 6,800. So the postings on all the momentums are coming down. We'll look at the moving average in just a minute, look at the RSI. But as the postings are coming down, the price is not coming up to meet them. I'm now looking at the 6-hour chart, and we've got 1, 2, 3, 4, 5, 6, 7 periods on our 6-hour chart, all of which are closing and the highs of which are below that 6,800 and we'll call it 6,840 line on this chart. And you see the stop and reverse points coming down sharply. They are now at 71.67. So if we were to keep going sideways on the 6-hour chart, the stop and reverse points are dropping by approximately from 72.30 down to 71.80. We'll call it 50 to 55 points per 6-hour period. And you can see that it will not take much longer to get below 7,000, and that will become very big resistance, and another 12 hours after that, we're going to be down around the 69, 6,800 level. Okay, so let's just go one more to the 4-hour. The 4-hour SAR is sitting at 70.36 and still no activity on the price to get us up to that. So that's one indicator. I'm going to take that off now, and I'm going to go to the moving averages. Now, the moving averages are interesting at a couple of levels, trying to decide how high of a bounce we could get. We are now sitting right on the shorter term. Now, remember, I'm using a 2, a 7, and a 30-week moving average, or period moving average. So on the weekly, if I make this a little bit bigger, you can see that we have had penetrations of that weekly line every single week, including the one we are now in. And in each case, the price was unable to stay above it, and it kept forcing it down. This is only a 2-week moving average. Obviously, on the longer moving averages, which are moving down now on this time period, except for the longer one, which is still absolutely flat. It is ready to turn down. I believe that 30-week moving average is going to turn down next week after Sunday. I'll do the calculation, and on tomorrow's vlog, we'll get into that. But now let's take a look at the 3-day period with the 2, 7, and 10. You can see that the price action again is attempting to hold above that 2 week, but is not doing it. Here on the 1 day, the 1 day 2 period is now going flat, exactly the same as the prices. So if the price can pop up close to 6,800 or 6,850, we could get an entire 1 day candle above the short term, which could turn it up. That's why I think it's so critical what we do in the preceding 1 or 2 or 3 hours from now to see if there's any strength at all in this price activity. The 12-hour on the 2 period has gone perfectly flat. And now we have on the 6-hour chart, the 7 period moving average and the 2 period moving average coming right together on the 6-hour candle, right in the middle of the candle. What does that mean? Either that candle is going to break up and we will get a very short crossing of the 2-hour above the 7-hour. Now, that is a very minor golden cross, but it is a golden cross. And that could indicate we could get up a little bit higher on a bounce, maybe to 68.50. If we break down from here, we're trading at 67.62 right now. If we break down from here over the next 6-hour period, then that will turn the short term back down and it will bring it back below the 7-hour. 4-hour, 2-hour, and 1-hour, all precisely the way I just explained the 6-hour. All 3 lines, the 7 period.
Hey, Todd.
Yes.
Can you refresh your browser just really quickly?
Refresh my browser.
Some people are saying that maybe that it needs to be refreshed. At the so if you go up towards the HTML, okay.
Oh, just refresh. Okay.
Yeah, exactly.
It is now refreshed.
Great.
And we're looking at the 1 hour, and we're at 67.65. And on this 1 hour, we have gotten back up in the recent hour to the intermediate term, the 7-hour moving average, and we are now above the short term, which has moved up. Good catch. So let me go back to the 2-hour and the 4-hour, and that is still flat. And we have been flat now on both the 2-hour and the 7-hour for the last 1, 2, 3, 4, 5, 6 periods. Okay, very good. So we are in a critical time period, no matter if you look at the 12-hour, the 6-hour, the 4, the 2, the 1, in terms of answering the question, can we go higher on this bounce from here or not? I've been arguing that 68.50 area is going to be very difficult to get above. And I'm saying that 7,000 will be almost impossible in my mind. Okay, let's go back and take the moving average off, because I did want to talk about Bollinger Bands, which we did yesterday. When you're talking about short-term bounces between 2 points, I think Bollinger Band is as important as any other indicator, except maybe the sequential, where you can actually get a count for each period, and you can see how the shorter term is beginning to bleed over into the intermediate term and the long term. You can do the same thing with Bollinger. So let's start with the weekly. On the weekly, you can see that here is the break starting in December from above the top line back to the midline. And then we spent 1, 2, 3, 4 was completely below it. That was our 59.20 bottom on February the 4th. Then back up to the midline, 1, 2, 3, 4 weeks in a row, and then breaking back below it. In other words, we had the ability to get back to the top, which would have been at 17,000, but we could not do it. And Bollinger told us that on this candle. And ever since this candle, which is the March 11th candle on the weekly time frame, the March 11th was a clear break back below the midline. Now, at this point, we are expecting to test the bottom line and close below it to get a return to the top line. That did not occur. We tried to get back to the midline on April the 29th, the week of April the 29th. We were on that run that had taken us all the way from the 6,400 level all the way back up to 10,000. And everybody was getting very excited that this is it. We're going to keep on going, get above 10,000, get above 11,000, and go to new highs. But Bollinger said, be cautious the week of April the 29th. As we came up to that midline, it said, not only be cautious, but look out below the week of May the 6th, because we couldn't even touch the midline. The very next week, we actually had a doji that might have been interesting, but the week of May the 13th, but it failed to give us any sort of reversal. And the following week, the week of May 20th, we plummeted. Now I started saying, look, we have not become oversold on the RSI. The Bollinger has not been able to get back below the lower line. This is not the bottom, even though we've got all this support over here, the week of the 25th, the week of April 1st, the week of April 8th, and that we were going to go to new lows using other techniques, using Hyperwave that's calling for around 4,900 to 5,000 initially, and measured moves off of a number of different things that we had been pointing out. In any case, we have kept going down until this big break that just occurred the week of June 3rd and following through this week for the last couple of days. Now, notice how flat this action is since Sunday night's closes at 8 o'clock on the weekly. We need to bounce, or this thing is going to start coming down all the way below 6,000, which is where the lower line is. My target was 6,300. We did not make that on my short-term change from neutral to negative, but I believe we are getting very close to doing that, meaning hitting 6,300, which is new lows for this move. That will not satisfy Bollinger. We've got to go lower, somewhere below 6,000, and really we need an entire candle below that lower level with a reversal of some kind of capitulation. Okay, now I'm going to just switch very quickly to the 3-day. You can see the same action. Last week we did pierce with the wick the lower line. But now look what's happening. The lower line is accelerating down. It's going to get more and more difficult to catch up to it if we keep going sideways or we bounce a little bit. Here's the daily. The daily is going down. We do have a full candle on the daily yesterday below where we are now, below that lower line. That could be the turning point on the daily level, and that would be, it has to be proven now, and this is the candle we are now in that started at 8 o'clock last night, that tried to get above the lower band, but as I said, the lower band is coming down, and now the prices drop back below it. So I think it's too early to call at the 1-day level. Here's the 12-hour. Same analysis. We've got 2 full candles at the 12-hour below that lower line, but the lower line is dropping sharply. So that even though we closed above it in the previous 12-hour period, ending at 8 o'clock this morning, the one we are now in is now dropping back down to that line. Now, luckily, the line is dropping so quickly that we are going to have to drop quickly to get back below it. And that might not occur on the 12-hour basis. So the 12-hour might be our first signal using Bollinger that we've got a chance to go back up to the midline, which at the 12-hour level is somewhere around 7,300. Notice, however, again, that midline is dropping, which means the longer it takes to get there, the lower it will be when the price meets it. And we will be down at 7,000 at the rate this is dropping fairly quickly, meaning in the next 2 days, unless this price can get going again. Okay, so most of what I have been saying is real time. I haven't had time to do this analysis offline. I wanted to bring it to you. And what I'm going to do now is I'm going to go back so we can look at Thor. Hi, Thor. And talk to Leah and draw my conclusions in terms of the question that I posed, which is, we hit a low almost 2 days ago, a day and a half ago. We've been going sideways ever since. I had been calling for a bounce up to as high as 7,000, and we've incrementally been getting closer and closer to it, up to 6,800, a little over 6,800 to 6,830. And then all of a sudden, earlier this morning, all of that air came out of the tire very quickly in a 30-minute period. So I had to ask myself, is this bounce from the bottom over? Will we see anything above 6,830, 6,850? Is it possible we can get as high as 7,000? And my answer to that, after looking at the charts that we've just seen, is the bounce is probably over. But I'm not going to give it a 75 or an 80% probability. I'll give it more like a 55 or a 60 because of what we just saw on the shorter time frames with the Bollinger Band being penetrated from the downside to the upside, and in some cases 1 or 2 full bars at the 6-hour and the 4-hour level being above that lower line. So there is still the possibility to squeeze out a little bit more. Now, what's the significance of all this minutia? Well, if you listened to Tone this morning and yesterday, and you listened to me over the last 2 or 3 days, Leah and I going step by step through why we have been bearish, why we are more bearish than we have been since we dropped through that $7,200 bottom. To me, the inevitability of much lower prices is right around the corner. The question is, where is that corner? Now, I'm not telling anybody how to trade or what to trade. I'm giving you the analytics that I use to make decisions in a bear or a bull long-term trend. Then I'm giving you the tools that I use to make decisions. If you're in a long-term bull, where do you want to look at intermediate time frames? And in a long-term bear, which this is, because it's now gone on for close to 6 months since the December 16th high, and it's still in full force, at what point do you want to speculate on catching a bottom and going the other way for either the intermediate term or the short term? Now, you've heard me say that the intermediate target is in a bear market with a target of 4,900 to 5,000. So the only thing someone might be considering is going against the intermediate term by trying to play a short-term bounce. My short term is negative down to 6,300. You might, excuse me, you might have another short term using whatever techniques you use. But what we are talking about today is a tiny bounce from the lows that were just hit up to maybe 6,800 to 7,000. Maybe it squeaks above 7,100. That's what we were just looking at. That has no impact on the direction that this market is going. It is simply the way Charles Dow talked about it. The tide is going out for Bitcoin. The waves are getting smaller and smaller at the intermediate term level and are being pulled out to sea by the tide, which is the long-term trend. But if you're standing on the beach, there are still little ripples, which are these short-term moves up and down 5% when a wave crashes and makes it up to the sand on the beach. That's what we've been discussing today, is the little tiny ripples that occur in a downtrend. Now, when the tide is full force going out and the incoming waves have been neutralized by that tide, pretty soon the little ripples will be neutralized and the water will be coming up on the beach at a shorter and shorter distance. You've got to decide when it's time to pack up and go home. And all of these technical systems, regardless of who's the practitioner or who founded it, Charles Dow was back in the late 1800s, and it still works today for Bitcoin. You need to see the scope of what these technical tools are telling you. Forget who is doing the talking. Learn what they are saying in terms of these techniques, and then you decide how and when you want to employ them. And with that, thank you very much, and back to Leah.
You have a couple of questions, Ty.
Great.
So would a breakdown of, I don't know, I always get reverb. A breakdown of 6,000 down to 5,700 be enough to reset the weekly RSI? Would that then be viewed as a false breakout pattern?
Okay, once more with those numbers.
No problem. Would a break of 6K down to around 5,700 be enough to reset the weekly RSI? Would that then be viewed as a false breakout pattern? So
I see. Very, very good. So the assumption is if we, depending on the speed with which it were to occur, if we drop below 6,000, get down to about 5,700, could that get the RSI? I don't know what exactly was meant by reset, but I think I understand. could that get the RSI down to 30? In other words, would that move be big enough to get the RSI oversold on a initial basis? That all depends on how quickly you get down to 6,000 and 5,700. That's the thing that propels what goes on with RSI calculations. Now, remember, RSI is 14 periods, basically. It can be changed around, but that's what Wells Wilder Jr. designed it to be. So as you get deeper and deeper into a 14 period period, each of those weeks will be affected differently than if it takes a long period of time to do what you just described, 6,000 to 5,700. I would guess that 5,700 would not be enough to take us down, if it were to occur this week or next week, to an oversold position. And if you go back and listen to Tone's discussion with Leah and myself, I can't remember if it was yesterday morning, but we went to a big discussion of RSI, how deep we think it can go. Tone believes that all we need to do is penetrate that 30, and he might very well be right. That's enough to do it. I am doubting that, but I don't have any evidence other than the amount of time it stayed above 70 and above 80 for weeks at a time on multiple occasions as we were going up. I see us going down here as powerful a move. I believe that phase 7 of a hyperwave is as powerful, even more powerful than the 2, 3, and 4 of the acceleration of a cycle of a hyperwave. But let's just put them on an even basis. Let's say 2, 3, and 4 in a hyperwave going up is equal to, in terms of force, power, sentiment, the drop in 7. We're in a drop in 7. I think we've got to get down to 2, which is 4,900 to 5,000, before we're going to be able to make any conclusions. I don't think 5,700 is going to give us anything, even if that propels the RSI down to, let's say, 35 or 32 or something like that. That's the appetizer. That's not the main course. The main course is going to be the test of the phase 2 line. Tone's 49.75. Mine, if it takes another week or 2 weeks or 3 weeks, will be a couple hundred points higher than that, because the phase 2 line is moving up at approximately 80, 82 points per week. So there's going to be some kind of a crossover. Now, if we drop today, and it could happen, or before the end of this Sunday, and that could happen, down below 5,000, then miraculously Tone's long-term target and my long-term phase 2 line are going to almost exactly match each other. I'm not saying that for anything other than to show how different systems can draw the same conclusions coming from very different points of view. So that's more than the questioner wanted to know, but I wanted to fill that out a little bit.
Thanks, Don. Do fib extensions play any role in funky hyperwaves after? Move this back. And I am getting soundboards in, I swear, guys, this weekend. Okay, let me start over. Do fib extensions play any role in funky hyperwaves after they found support on a phase line and started a new hyperwave?
Yeah, great question, and I cannot answer that, because it was really only a couple of days ago that I realized the amazing relationship between the fib numbers, the fib lines on the extension going up to 19,666, and hyperwave itself, not only going up, but going down. So I have not had time to get into that in depth. We are beginning to get, hey Thor, we are beginning to get some wonderful analysis by people that have been listening to these vlogs for the last 4 months, 5 months, having to do with Hyperwave. We've had 10 or 15, including today. Somebody came up with a great new Hyperwave. I think they might have mismarked it a little bit. You can look at our Twitter feed. But it's a beautiful Hyperwave that I had not seen, and it's completed all the way down through 7. We're getting great analysis from other people. One of the problems with me keeping Hyperwave under wraps for 40 years is basically I've had to do all this thinking myself, and it's very, very time consuming because you've got to look at so many charts over so many time periods. Now, all of a sudden, the analytics are beginning to accelerate because of the work that you folks are doing, including that observation that we talked about yesterday about how maybe I misspoke about the fib extensions prior to the top. But I need to take a lot of time, and I'm talking weeks and months, and look at a bunch of Hyperwaves and use the fib extensions on them. Now, the problem with that is the data for most Hyperwaves precedes the ability to get Fibonacci against that data, because a lot of them occurred before there was charting techniques, and nobody's taking the time to go back and rebuild all of that data. So anyway, your question specifically about what's the relationship with the Fibonacci extensions and a funky Hyperwave, that can be something that a bunch of you can take a look at yourself, but I will do that because I have been arguing that I'm hoping that Bitcoin is going to turn out to be a funky Hyperwave with its bottom somewhere around 4,900 to 5,000. And we will know that very quickly. Because if we blow right through that level, then we're going down to 1,000. No funky Hyperwave, no reason to talk about Fibonacci and funky Hyperwaves. We can put that off for another day. Or we can bounce off that line 4 times, 10 times, 15 times before showing its hand if it's going to continue to hold and go back up and go to new highs, or if it's going to collapse like phase 3 did. That's all theoretical stuff, and we're in between that, but we're getting very close to the point at which we're going to know the answer to those questions.
Thanks, Ty. Yeah, Thor decided to stop co-hosting. How important are the MACD and stochastics in comparison to the RSI in your eyes? Do they all have relevance, equal relevance, or are there any other, any other oscillators that are just as important? So to recap, how important are the MACD and stochastics in comparison to the RSI? Do they all have equal relevance? Are there other oscillators that are just as important?
There are many, many oscillators, and there are many, many ways of looking at all these things. At some point, you have to screen through all of those, test them. Larry Williams, who came up with the original sequential system back in the late 1970s, also has, and you can pull it up, it's called the Williams oscillator, the Williams percentage. But there are 20 other great oscillators. Work through them. You'll see that they all give you about the same, sometimes a little bit different reference points at various points. You can go through all 20 of them every time you do an analysis. What I've done is I've tried to go through all the various systems and come up with the ones that are the most meaningful to me, that I can quickly look at and draw conclusions from. And that includes the RSI, the MACD, the stochastic RSI, as well as some of these other things that in a way are oscillators, like the stop and reverse point, when you get down to lower and lower time periods. The ones that I'm using to present to you with Bitcoin, there's only about 6 or 7 of them. Those are the ones that are my go-to ones. But I always go back when there's a question between, for example, the RSI and the MACD. Remember, the RSI is one line. A stochastic RSI are 2 lines. The MACD is 2 lines, but it also gives you this thing which is just a single bar chart that is helpful of seeing what those 2 lines are telling you. So there's always going to be a difference between a single line like the RSI and a secondary line with a shorter time frame that is basically encapsulating what I call consensio. It's doing it on a very minor level, but it's measuring 2 different oscillators or 2 different time periods that come together in a wave-like pattern. I like to go to the third on consensio, and I've already told you that there's 1,000 some odd possibilities with 1 price and 3 lines, but it gives you tremendous detail as you go through all of those various steps when you're really making a critical decision. So everybody will draw their own conclusions about which of these oscillators are the most significant. I use all of the ones that we're talking about right now, and I use them to check each other and see what they're saying. Are we getting some kind of disequilibrium between price and a MACD, but we're not getting it between price and the RSI? That can be a telling thing to look at. So just, again, a little bit more than you wanted to hear, but I think this is a critical time to be talking about these kind of issues.
Thanks, Ty. Really brief answer. Let's see how quickly you can make this one.
Yes or no?
And why are you still neutral in the short term?
I'm not neutral in the short term. I became negative in the short term when we broke down through 70.26. Go back and look. And my target is 6,300, which we have not reached. Therefore, until we reach my target of 6,300, I'm not going to reassess my short term that began at 70.26. That's the way my short term works, is when I make a change, I'm not going to flip back and forth between neutral or negative. When I go from neutral to negative, that is my call. And I'm looking for a 5% move. Well, 5% from 70.26 is 350 points. 350 points from a 70.26 is 66.50 approximately. But I overrode that 5% move by saying my target was 6,300. So until we get to 6,300, I'm not going to revisit my short term. If we go back up and we reestablish ourselves above 70.26, I will rethink it. Why? Because I was neutral down to 70.26. Okay, so that's just the way that whole thing works.
Great. Just wanted clarity. Thanks. Quick question. Is it advised for analysis to do at UTC time or local time, given that we're on the East Coast? Can it be important for daily candles, et cetera, especially on a daily time frame, actually, is the question.
Wow, that's too complicated for me. What I mean by that is I was in the Coast Guard for 4 years. I spent 4 years learning and using everything having to do with celestial navigation, in which you need to use all the time zones right down to the minute in all your calculations, and it is, you can't do it. So there are books that have all of those. You flip to the page, you look at the time, you take your readings. I don't want to do that again. It's intellectually draining. So everything I say is based on Eastern Standard Time, although I understand that Bitcoin is artificially linked to that 8 p.m. Eastern Standard Time or 000 UTC time. As soon as I'm beyond that, I close down. When I'm looking at the U.S. stock market, I'm looking at a closing time of 4 o'clock Eastern Standard Time. When I first became a broker back in the 1970s, I did it in Hawaii. And that meant that the U.S. market in Hawaii was opening up not at 9:30 in the morning, but anywhere from 5 to 6 hours before that, 3:30 in the morning. And it didn't take me long to say adios. And unfortunately, I left my beloved Hawaii for Southern California, because then at least I picked up 3 hours. So instead of the markets opening up at 9:30 in the morning in New York, they were opening up at 6:30, and I could get into the office and clear my head. So please don't ask me to start making technical analysis based on other time periods. My brain would explode.
Okay. So you up for a couple more cues?
Oh, of course.
Always. All right. Maybe we'll get more coffee after this one. So I like this one. So specifically, the question is going to be focused on divergence. What indicators do you find most useful for trading based on divergence, and where does the commodity channel index, the CCI, stand with regard to usefulness for trading divergence?
I have found that I get into trouble using divergence more than a lot of other technical analysts do, because I tend to put more weight on it than it deserves. And I've never found that right balance between what does divergence tell me really between price and, let's say, the RSI, or between price and the MACD, or between price and price at volume compared to another indicator. You've probably come to the conclusion that I have an ability to take fairly complex concepts and put them into very simple language. I use metaphors and aphorisms and adages as a shortcut to a lot of words. I do the same thing in technical analysis. It's possible that that's because of limitations in my own capacity. But it's also possible that in order to take complex concepts and reduce them into simple underlying principles, you need to take shortcuts. And I find divergence, as opposed to the actual movement of the individual identities, price versus RSI, an additional step that sometimes confuses what the identities themselves are saying. Meaning, price itself, what is it telling me? The RSI itself, what is it telling me without knowing price? You have seen me take away price when talking about consensio, because I like the simplicity of what the lines of moving averages by themselves are telling me without adding that other additional irritation of price. Get rid of the price and look at the identity of that technical indicator itself. What is it saying? So what I'm saying is, forget price and look at RSI. If RSI is going from oversold back up through the 30 line, it might very well be telling you something about price in terms of price hitting new lows and going back up to new highs, or it might not. The only thing you make money with or lose money with is price. You will never make money or lose money betting on the direction of an oscillator, a moving average, OBV, SAR. That doesn't make you the money. It's when it's translated into the price itself. So after you've used the tools, no, I'm sorry, after I use the tools and I look at the tools relative to each other, are they telling me the same thing or the different thing? I don't want to take an additional step and say, are these indicators telling the same story or different stories? And what does that mean for price? I just want to look at the indicators by themselves, look at the price by themselves, and draw my conclusions.
And given that I know you read it, we spoke about it, and we spoke about it on the morning show yesterday, what are your quick thoughts about ugly old goats? I always laugh trying to say that. At least I can laugh on this show. I try to be serious sometimes. Article that he published, specifically the one yesterday, and in regards to the question is that he was trying to make the case that we're unlikely to break the first quarter low.
Well, first of all, well, I've got a lot of thoughts about it, and it would take way too long, but I really admire someone who knows themselves so well that they are unapologetic and unlimited and unafraid in their ability to self-criticize in public. Number one. Number two, I'm very impressed by the thought process by which conclusions are drawn from propositions. In other words, logic. I am a logic freak. And you can get the same flavor when Tone goes off in great detail about his thinking process of why he does what he does with the sequential system. When he just draws his conclusions, you don't get that flavor. When he gets lost in his thinking and you can see all of the synapses working together, tying disparate points together to draw the conclusions, you have to become more confident in those conclusions. Same thing with the old goat. Very, very impressive. And then being able to express that logic in words, in writing. So it's all there, and it should be studied. You don't need to take and agree with any or all of the conclusions, but you would be remiss not to consider them carefully because of everything I just said.
Thanks, Ty. I also had a question about how we knew each other, so I thought that was a little fun to answer. Given that you've known me since I was 14 and getting in lots of trouble. But yes, Tyler has always advised me, especially throughout my strange career, and especially I will always remember you prepping me for Goldman Sachs and muni bonds and not understanding really a thing about muni bonds. And so yes, Tyler's wealth and knowledge expands, as we all know, to all things in life.
It's funny you bring that up, because we don't really talk too much about how you and I got together to do this show called Hyperwave. But you've let the cat out of the bag now. With our consulting clients, remember that I don't like this medium, but I love this medium. I don't like this medium because it's me lecturing to a screen. And sometimes I see Leah, sometimes I'm just looking at a chart and just talking. And it's a one-way thing. Leah has the opportunity to look at live chat. I never look at live chat. I really never look at comments on Twitter. Other than whenever I see a question, I go over very quickly, and when I see a question or a comment or something that I believe is helpful to me, and therefore my interpretation of things for other people, then I always try to answer it or make a comment on it. But so this medium is very, very difficult. And it's very impersonal from our side, other than you get to see how we think and talk and joke around and a little bit about who we are. We never get to know you at all. So one of the things I like about what we're doing with our consultancy relationship is we get to know you very well. In fact, we won't give you any advice or consulting or opinions until we get to know you very well. And that means talking with you a lot, corresponding with you a lot, getting to know your financial situation a lot, all of that sort of thing. But in doing that, we also tell you a lot about ourselves. And we've had a number of people recently make comments about, oh, I had no idea that you and Leah knew each other for so long, and the relationship between the families, and the relationship between my son and her brother, and how they have built a business together, and how that occurred, and how they originally set up Lucid Investment Strategies 10 years ago. Not me, they did it. And on and on and on. And how Leah, when she went to school in Madrid, she and I would talk about an upcoming paper she had to do, or an upcoming test that she had to take. And then when she went into the business world, almost every step of the way, she would call me with these great questions. And at one point, and nobody wants to hear any of this, I'm really just talking to Leah. But at one point, I was the chief strategist at a hedge fund company that was a fund of funds. And for 3 years, I was looking at about 25 different hedge funds that they owned, making comments based on technical and fundamental things about what they were all doing and that sort of thing. And while I was doing that, my partner in the hedge fund, the owner of the hedge funds, and I had a long trip. We had to drive up to talk to some hedge funds up in the Northeast. And so we had about a 6-hour drive. And on that drive, Leah was preparing to be interviewed at Goldman Sachs. And so she called, and I started talking with her. And my partner happened to be really, really good at fixed income stuff. So I put her on the speaker, and we started to talk. And we went for 3 hours going into huge detail about Goldman Sachs and fixed income and muni bonds and how it all worked from his perspective, meaning my partner's, and my perspective, on and on and on. So this relationship with the Hyperwave vlog came about because my son and her brother has a firm that has grown tremendously over the last 10 years, and they're doing a lot of work in blockchain. And her brother and Leah and myself and my son started going to conferences and trying to learn more and more about what other people were thinking. Leah loved it and got into it in a big way. I was not all that interested until my son called me up one day and said, "Dad, I think you should take a look at this Bitcoin. I think it's in a hyperwave." Now, that was in the spring of last year, before we really got going. And that's when I first studied it from the point of view of hyperwave. And I immediately saw he was absolutely correct. And not only that, we better start getting into this very quickly, which we were able to do, and then put clients in it later, because it was so clear as we were going from phase 2 to phase 3 to phase 4 that we were about to have an explosion in price. Okay, so all that occurred, and now Leah is learning more and more about the space. I learn about tone vase because I looked at everybody in the space. Who's doing what I'm doing? Who's using techniques? Which ones are doing it right? Which ones aren't doing it right? Which ones? And it became very evident to me very quickly about a dozen people that I wanted to follow, and I started following them. And I told Leah about them. And one of them was Tone Vase. And I wrote to Tone, and he wrote back to me. Leah contacted Tone. Tone contacted her. And that's how this whole thing started. It became clear that Hyperwave, nobody else knew about it because nobody else knew about it. I had never let it out before, except for 20 years ago, and I'll talk about that at some later date. I opened up the door a little bit, got some people very interested in it, then I closed the door, and I never went public with it again until we started this vlog 5 months ago. And I saw that there was a niche that needed to be filled in the analytics for Bitcoin specifically. And Leah suggested to me, "Why don't we do this?" And I said, "Wow, that sounds great. Let's do it." So we've got 2 people listening now. So I think we better cut this out. This
Actually, Ty, we have 400.
Oh, okay, good.
Yeah. All right. We'll stop here. But yes, to everyone in the live chat, Tyler, and 1000% true. Tyler is the best mentor in the world since I've been 14 years old, and the amount of things that he's helped me with is just phenomenal and just insane. And like yes, the muni bond trading, knew nothing about that, and specifically then I ended up taking my first job working for one. It ended up being a private equity firm. Was also doing consulting for that, but specifically advising one of the top hedge funds on Wall Street. They have 40 billion AUM, and they're an activist investing hedge fund. And specifically, I was focused on Asian equities and fixed income. Do a lot with macro trades, and had to learn really quickly because I had no background in finance. So pretty much every day I was calling Tyler, and I was like, I do not know what I'm saying. Specifically when I came up with a couple trades on which companies they should buy, which are publicly listed on the Nikkei, they'd at what price point should we be buying? And Tyler, I have no idea. Please help me with this. And then learning about treasuries, and then pretty much we geek out on like every Thanksgiving dinner. I think everyone was a little, like they'd ask us like, "How's life going?" And we'd still be geeking out about, especially when you were very much into astrophysics and the Hadron Collider, and also the book that you were writing. So I'm just going to throw that out there. Okay, so now, yes, we will end here. We have a lot of great questions. I have caught all of them, a couple great ones for full shows.
Great.
So that'll be really good. And everybody, thank you so much for watching and listening.
Thank you very much, everybody, for letting us go off on this ride down memory lane. Thank you.
Bye.